I think. My internet might be faltering here. Okay, sorry guys. If you're in the daily trading room, you know this, but my internet has been progressively getting worse. And I was hoping it would be fixed today, but now it's going to be Friday, and they're going to mount my Starlink dish like 80 feet off the ground. So that should make a huge difference. Started off good, when we first moved in. So let's see who's here. I think we should have some brand new members because we had quite a few sign up the last few days. Yeah, some of you guys are here. Okay, so to begin with, this is your time. This beginner class, I don't come to it with content. I mean, I always have something in mind I want to talk about, but really it's your time. And this includes if you're brand new and your charts don't look like mine. You have a question about whatever, Tastyworks, it doesn't matter. It's literally your time, and you can ask anything you want and I will, answer it. And I know sometimes that could be tedious for people that maybe this is their 5th beginner class. It does start getting redundant and you get to the point where you're like, I can't stand watching this guy set up one more chart. Then you probably want to promote yourself at that point to the advanced class, because the advanced class isn't necessarily advanced. It's just not a beginner class anymore, if that makes sense. All right, let me get rid of that. Got a question. Chop, assuming other indicators are lining up, what is the size of a step down, 3 or 4 points, or is it something that depends on other factors? That's a great question, Dave. So one of the reasons that there's many reasons I went to bars, but to me, there's nothing better or easier than just a visual look. And the bigger, the better. But sometimes they're not all that big before a good trade. Boy, my internet is really bad. So here, this one at 8:58 on this morning, that was a really big step down. And it came after, I'm missing an indicator, sorry. It came after the bull signal. And you can see that leading up to that drop down, you had 1, 2, then a third step up in the DPO. And I don't have RSI up here right now, but I'm going to assume it's exactly the same. I'm going to put up RSI by it. No, I'm going to put the whole thing up here. Let's see. I think it's this one. I got way too many versions of stuff. So, and you can make the scale of these bigger by doing this. And the DPO, it's kind of buggy. So I've now have that broken out on its own. But what you're looking for here is, let's go back to that step down here. Well, and I know it's goofy, but I call the purple the mole and I call the yellow the molehill. And so here's what was happening. First of all, you did get a little step down here, and that's about the time the mole showed himself. And then you had a mole stand taller, DPO got much taller, and you had this pretty good step down here. That might be enough for me. But then what I'm always telling myself is, if this is a really legitimate signal, there's no reason to have to jump in it. We scalp. So if it's a fake signal, you better get in right now, but then you're going to get faked out and lose anyway. So time is almost always your friend when you're evaluating an entry, because then this step down was so undeniable. There's no way you could not take that. And you also had now 1, 2, 3, 4, 5. This was your 4th step up in both the mole, the molehill, and the DPO. So if you just waited all day long for that, you would never take a loss. But yet we look at things that might work. I know I saw Lee's in this class. He's way better than this than I am, way better. But And I'm not going to say it again, Lee. He likes me to repeat compliments, but I sometimes do get a little bit too tradey when I know there's 120 or 30 people looking and watching and waiting for a trade, and that's bad. That goes to sort of the pleaser in me, and it's something I'm aware of, and I keep in check. Lee's not going to let anything influence his entry, period. Period. So just if you back away, from this picture, you really do start getting a feel for what happens when the mole comes out and the chop indicator disappears and the DPO is going up. It's almost always going to create a really positive move here. So when you can see the purple and you can't see the blue, that's why I put these together. That to me right there, I won't say it's all I need to know, but it's pretty close, because guess what? When that happened, the step down happened. So there's something really powerful when RSI overshadows DPO, chop. Very powerful, because when you can see the chop clear as day, well, that's a problem anyways. And you can see this was a horrible spot here, and it really stayed horrible for a long time. On or about here, the mole started showing himself, but chop was still way too prevalent. It wasn't until about here that I would go in. We talked about this area. This is also where the step down happened. I'll back up, and here's another example. You can see everything. So really, you shouldn't have to stare at that chart. You should just say, oh, I see the chop. I don't see RSI, or I barely see it, and I don't really have much of a step down. And then all of a sudden, boom, on this candle right here, 656, the RSI overtook the chop. You had a step down. It wasn't huge, but the fact that these things happen down here, and the DPO 1, 2, 3, 4 times in a row moved in the direction you want it to. That's, again, it's pretty much all I need to know. Now, it's a shame on this one, the bull signal came kind of late. It actually came very late. And these are situations where I might actually consider going in without the signal, because there's other things at play that we're going to talk about if we have time. Okay, did that help? I know that's a long-winded answer, but it's also, kind of a clue on trading the system. There's got to be more questions. Heather, did you get help with your chart yet?
I sure did. Dan, thanks for asking. Also, what is the best way to ask questions on here? Is it just to unmute ourselves and go for it? Or are we raising a hand somehow or typing a question?
Well, you already decided that. Just jump in and talk. Yeah, sometimes, like, if I'm talking, then it startles me. But if I'm saying of any questions and you don't want to type, absolutely. Some people will type and say, can I unmute? I'm not too particular, other than you'll learn my focus is not great. And so I sometimes get off track. And that's why I'll wait to answer questions. But it's really whatever you guys are comfortable with. But thanks for asking. Let's see, I think there were a couple other brand new people. Wayne, how are you doing with your setup?
Yeah, I'm following the videos. I got to indicators and I tried to follow, but I believe you want us to have a specific chart that isn't listed under my scripts. So I kind of got stopped right there.
Okay, so do you have the invite only script showing up yet?
No.
Okay, so there's 2 reasons why that can happen. The first reason is you have a free version of TradingView. And what you need to do is start off, you can get the cheapest paid version they have. I
did put in my credit card. It says I am in.
Good. Okay, so that rules that out. Then the second thing is, did you give me your TradingView username so I could add you?
That I didn't do.
Okay, so yeah, I have to physically add you, and once I add you, then you will you'll see that invite only script show up. So okay. You can tell me right now if you want, since we're here. It takes 2 seconds, guys.
I'll just type. Want me to just type it in the box? Would that be easiest?
Is it tricky?
Oh, it's Wayne San Clemente, all one word.
Well, not too tricky. I think I can do that. All right, guys, bear with me 1 second. I missed that area. I lived in Laguna Niguel for a long time.
Okay, so you know how to spell it then.
We'll see.
Dan, while you're in there, this is Heather. Could you add the updated station, and in addition to the flight station lower panel or something? Audrey went on my computer last night and was able to get my screen set up, but in case in the future, if I ever need to kind of reapply those, I don't have them in my invite only scripts.
Well, I think if she set you up, then you do. Let's take a look at that real quick. I made a mistake on Wayne. Let me just get him in here. And thank you for bearing with me, guys. There you are. Okay. And then, so that's one panel. And now I'm going to add you to the lower panel, which just takes a second. Only I could type. There he is. Okay, Wayne's done. So Heather, when you go to, where are we? When you go to invite only scripts, what do you see?
I only have the just first flight station, the one that you have highlighted, that one, the next one up, that one with the little star next to it.
So do you have flight station?
That one.
Do you have flight station and flight station lower panel?
No, just
okay. All right. So you need to be added to lower panel. Is your username easy?
Yeah.
Okay.
Heat, H-E-A-T, capital L-U-C. I'm the third one down from the top there.
Oh, you're showing up?
Yeah.
Heather.
It's just H-E-A-T-L-U-C.
Heat?
L-U-C.
Oh, sorry. There we go.
There we go.
Oh, that says you've been added already.
Weird, it doesn't show up.
Let me make sure this is, yeah, there's a lower panel. You're in there. And won't let me add you twice. So we'll troubleshoot you afterwards. You know what?
Sure, no.
Try logging out
Okay.
completely out of flight station and then sign back in. That ought to do it.
Okay.
Hey, Dan, this is Andre.
Yes, sir.
I have your flight station and the lower panel, but I noticed that you have like a blue chart and then also a red and green chart that doesn't show up on the lower panel. Is that like?
I think you might be talking about this one, right here where my mouse is.
Yep, that one. Yep.
Yeah.
And then the blue one below that one.
Okay, so this one, don't worry about it. It's actually a paid indicator that I'm testing. And it's not really adding value. It's just kind of in the test mode. The blue one is actually built into this top one, the lower panel. But it's so important that I do set it up separately. So if you want to see it separately, it's just called chop. Type in chop like so, and you'll see choppiness index. So you can add that yourself if you want. I've also noticed the green. This is brand new, by the way. I just had these combined and I did this for a couple of reasons, but one of the reasons was so you guys could use a free account. So by building all these indicators together, you don't need a bunch of indicators on your plan. But because this one's been glitchy, I did add it by myself as well. And that's just called DPO. And it's also really important. So maybe this wasn't quite ready for release, but it wasn't glitching when we tested it. But if you go to settings on this adjustment DPO schedule, if you start changing this, for some reason, it fixes itself. But now it's not. Now it's actually making everything else disappear. So what makes this is DPO. In fact, you guys should know this anyway. DPO is the green. CHOP is the blue. And again, that's just by searching right in here by DPO or CHOP. And then RSI is the mole and the molehill. And that is, there are a couple changes that have to be made to that. And it looks like this. Now, all of these indicators come in lines. And this was a recent breakthrough when we changed it to bars. Things became really, really obvious that we weren't necessarily noticing with the subtle movements in the lines. So if you see lines, by the way, first of all, on RSI, on any of these, if you double click or if you right click on the indicator, you're going to see the settings button. And then once you open that up, RSI needs to be changed to EMA. I think it's currently at SMA, and the length needs to be changed to 8. That's super important. And then if you want to change it to bars, hit style. And next to it, you see these squiggly lines here. Just change those to bars, to, columns down here at the bottom. And that's how you'll get this look that I have. But maybe since this top one is buggy and you all probably have a paid indicator, at least for now, this would be 1, 2, 3 separate indicators here. And unfortunately, that's what I've had to do lately because I don't know what's going on with this bottom one. I don't know how that could be buggy, but it is. And again, you can still get that picture by separating them. It's just not as good. Because again, there's something about when the mole comes out of the hill and you can no longer see the CHOP. But you can also back away and just say, wow, okay, CHOP is going down, DPO is going up, and the mole's getting taller. That, you know, that's good. I don't even have to look above. I can tell you right now, if I saw that picture, I don't need flight station. I don't really need support and resistance, because once this thing dropped down after those other things happened, that's going to be a good entry. Now, I know you probably don't even quite know what I'm talking about yet, but you will. So
is it bars or column? I don't see a bar.
it's column. It's column. I did correct myself, but yeah, I'm having all kinds of crazy glitches. Like it's not giving me, it's not showing up on these old candles, only the new ones. I think it's working on the shorter, yeah, it's working on the shorter term chart, fine. And flight station in conjunction with the colored candles is designed for a short-term chart. The signals themselves, bull and bear, they work in any time frame, but the colors only really matter when on the shorter time frames. Okay, so anything else on the charts? Okay, so I'm just, gonna breeze through real quick what I see as a signal. And I think you're gonna find this pretty easy after you do it or see it a couple of times. So first of all, we only go long when we have a bull signal and a blue candle. And I want to see confirmation though. And you can see, even though I got an entry, it stayed flat for 3 or 4 candles. And this looks like no big deal, right? But if you really entered at the top of this candle, maybe, which is, let me go to SPY instead. It's gonna take a minute. Okay, so if you entered at the top of this candle, which is 381.25-ish, and then the next candle, it pulled back to 381.03. That was a 22-cent pullback. That's enough to scare some people out of a trade. So we didn't have confirmation. All we had was a bull and a blue candle. Now, again, it's fine. You can take that. You're going to have a slightly less win rate, because what you want to have happen is you want to see a progression in all these indicators. So first, I want to see RSI slowly working its way up. I want to see the DPO slowly working its way up, and I want to see the chop and with a pretty good step down before I even enter. So for me, this first step down, I probably wouldn't have entered on, just because you can see how DPO didn't go anywhere. And in fact, RSI disappeared. So for just a minute, it was looking like it could be a false signal. However, the very next candle, DPO fell. This is a meaningful fall. This is the kind of fall that is worthy of jumping in. And then if you look back and you see, okay, the green got taller and the purple got taller, you're very rarely going to go wrong with those entries. And you can see the signal turned it out to be $1. $1 is about $50 a contract. I trade 40. That was a $2,000 move for me. If you trade one contract, that was still a $50 move. In the beginning, I want you to trade light. In fact, I need to talk about mindset too, because we have enough new people. So you might even want to write this down. Slow is fast, and fast will never get you there. And what that means is people that start slow, paper trading until they're consistently making money. I'm talking like for at least a week, you look back maybe that week and you say, I made money, I'm profitable. Maybe you lost 2 out of 3 days, which would be a little bit of a concern. But if you still made money over that period, it means you managed your losses okay. And now you go from paper to trading one contract. And when you're trading one contract, we're going to talk about delta too, because that's pretty important. So this is what my QQQ order screen looks like on Tastyworks. And you'll hear Lee and I say, okay, I'm going to load some up, and we'll say, I'm going to load the 270 for tomorrow. Well, tomorrow's date means this thing will expire tomorrow at the close. Literally will be worthless unless it went up enough that you get assigned the stock. That's another conversation. We don't hold them that long. That's why we buy just the next days. So next day, 270, and I'm going to pay about 169 right now. And as the stock price goes up, the option price will go up. How much will the option price go up? If the stock price goes up $1, will I make $1 on the option? Nope. I'll make as much on the option as I pay for on what's called delta. So if I say I'm buying this 270 for tomorrow, I can see here that's a 50 delta. And all that means is for every $1 that the stock price moves, my option is going to move 50 cents. So I'm going to get half the value of the stock move. And what's cool about that, the stock costs $270 a share, and the option costs $1.65. So you're paying this tiny fraction of the value of the stock, and you're still getting half the benefit of the move. It's insane how much leverage you have with these options. So we're typically, now this orange line is considered the money. And why is it called the money? Well, the stock's at 270 and the line goes across this 270 level. And in the money on a call, you could actually see the ITM kind of small and the arrow pointing down. That means everything below this line is in the money. That means the option is trading at a greater price than the stock price. And then on a put, it goes down here. And so in the money is anything below the line. But if I say I'm buying the 270 and you're brand new and you're nervous and not sure you know how to get in and out, and all that stuff that happens to new people causes anxiety, I would like you to buy down here. It doesn't matter. Buy the whatever number you're willing to say big deal about. Maybe it's the 276 or 277. Because yeah, it's only going to move 7 cents for every $1 the stock price moves. So you're going to get almost no benefit, but you're also going to get almost no loss. And the whole idea is just knowing how to enter and exit. Why not practice down here and do that, over and over and over until it's just really, really, ingrained in you. Does anybody need to know how to paper trade using TradingView?
Yes, please.
Okay. Tanner, something that really helped me a month or two ago was you basically thought out loud on actual trades. You did it in live sessions and in the classes a few times without actually jumping in, but went through it. Oh, sure. I think, and that's something I really enjoy doing. So yeah, we'll cover that if we have some time. So paper trading, there's two ways to do it. One is you can go to Webull, WEBULL, and open a free account. I don't even think you have to fund it. I think you just have to open it, and they have a paper trading module where you can actually trade options. But I like using TradingView. It's real visual. Now you're not actually trading options, you're actually trading the stock. But the whole reason for me is paper trading is when you see this bull signal, are you going to take it? And I don't understand, I can't see a reason why I wouldn't jump in on this one because we've got the progression. And so if I want to take this, if I right click and I go here to trade, now you're not going to see trade yet. I'm going to show you what you have to do and go to create new order. When you're trading along with us, I would make this say market because a market order will get you in instantly. And if I say we're going long, you're going to buy it. If I say we're going short, you're going to sell it. And then literally just click buy. So when I say I'm going in, you click buy, and this is going to give you feedback right away. So, and it's going to very closely mirror what's happening on the option price. Now I've got 3,000 shares here. So that's equivalent to about 20 contracts. 20 contracts would be a lot in the beginning. It would probably scare the heck out of you. So if you want, put in, 200 shares, something like that. And then when there's two things you can do here, and I'll show you how to do them in Tastyworks as well. But if I hold my mouse here, I can take the stop loss and I can decide, where do I want this? Well, I don't want to risk anything below this line right here. I'm not going to risk more than $450 if this thing pulls back. And where do I want to take profit? Well, I see some pretty good resistance right here. And so I've kind of laid out my trade now, and I can literally set it and forget it. You can see it's not doing well. It might get stopped out, but I don't really have to worry about it. And there's a way to do that in Tastyworks as well. So how do you get here? If you go to paper trading, sorry, here, I'm going to go all the way out to what you're going to see. There it is. Let me close this now. Okay, so you should see trading panel down here. If you click on it, you're going to see these are all brokers. You could actually get signed up with these brokers. Well, not quite yet, because none of them trade options on TradingView. But soon, I think we're going to be able to trade options on the screen. But what you want to do is just go to paper trading and connect. And they'll give you a $100,000 account to start with. Mine's up 133,000. By the way, I just was playing around. I forgot about that trade. I would not let a loss get that big personally. And that's it. So when I say get in, we get in. When I say get out, we get out. It looks like I got stopped. Somebody say something. Oh, it looks like, I got stopped out of that trade, and that's fine. It was just kind of giving you an example. So does that help, Heather, or whoever said, show me?
Yes, that's
Okay.
helpful. Are you able to go, well, I don't want to take up the whole class doing it, but are you able to go through one, or is that something that we'll just kind of learn as we go along?
Oh, you mean a trade? Sure. Yeah.
Like a real time, how we might practice doing it, or?
Yeah, it's actually something Tanner was kind of saying helped him a lot a while back. So first of all, from what little you guys know, does anybody think that there's currently a signal? Is there currently a trade you would take right this minute, second? Good job, guys. Some cheaters, they've been here a little while. No. Jay Coaxum, what is that? What's your first name? Oh, maybe you weren't. No, I'm sorry. You weren't answering my question. I thought you were saying yes, because you're paper trading, you would take a trade. You have to take, and you weren't saying that. I apologize. You were saying, yes, show me how to paper trade. So if you, you have to treat paper trading like it's real money. You literally need to go to bed tonight and go, this is real money. This is real money. This is real money. Because if you don't practice thinking it's real money, then you're going to get sloppy, take bad trades, and you're not going to get anything from it. You know, you'll hear golf pros say that all the time, like practicing at the driving range is useless unless you're practicing perfectly, unless you're lining up every shot, unless you're making sure your swing plane is good, you're watching all that stuff, then you're actually doing yourself good. Paper trading is the same way. Don't just start swinging the club. So we know that we won't have a signal until the following happens. And I guess what? I don't know which way this thing's going to go, and I don't have to. It's not my job to know that. There's a couple things that I do know, possibly, is number one, I want to know how low should this thing go. Well, always look for the pivot points. Where did it last pivot? And by pivot, I mean it was going down and it pivoted up. Here it was going up and it pivoted down. Now, do I count the wick or not? Well, if I count the wick, I look over here and I see it didn't quite catch, and it didn't quite catch. So if I move this up to no wick, I can see this is a really important pivot point right here. So below 31.20 might just be a good place to go short. I just got a bear signal. It doesn't mean anything to me right now. Why? The chop index is going up. The DPO is going down. I have not one single indicator that agrees with this. Flight Station's fault is during when the market's flat, it gives you false signals. And that's why we developed all this other stuff. But I do kind of know that if this thing can drop below 381.20, there might just be a trade. I drew the green line and I can see the 381.20 matches my line. If I want to know where the stock is actually right now, it's 381. It's between 381.19 and 381.29. That's kind of the range that it's been trading in. So it's really close to my level breaking out. But I am absolutely not interested in this trade until I see this thing step down meaningfully. And then this has to get worse. All this has to get worse, meaning the yellow lines have to get smaller. The green lines have to get more, facing down more, and the chop index has to drop. When all that happens and I have a red candle, that's a trade I may very well go short on. So right now we don't really have a trade. When we're in the live trading room, we tend to focus on SPY and QQQ. And there's a reason for that. And the reason is the next part of the lesson. And I'll keep coming back to see if we can come up with a trade here. What was I just saying? Sorry, guys, I lost it. So the reason that we trade just Qs and SPYs is if you go to Tastyworks and you open up your put in QQQ or SPY, and one thing you'll notice is every single day, one of them is expiring. I think there's no expirations maybe on Thursday, but every other day one's expiring. Why do we care? Well, the more farther out you go on options, the more expensive they are. So if I wanted to buy a call right now on today's expiration, I can buy the 270, 53 delta, which is really good, for a whopping 58 cents. That's awesome. But the problem is, at the end of the day, it's going to be worthless. And so literally almost by the minute, this thing is losing value. Regardless of the price, this thing is losing value because in an hour and a half, it's worthless. So every minute it's worth a little bit less. Now, if the price runs up enough, it will outrun what's called time decay. I'm talking about time decay. Every minute it's worth less. So usually we'll do the first couple of trades on today's expiration, and then I start noticing time decay. I'm going to trade tomorrow. But look at tomorrow's. Tomorrow's, now it's 3 times the cost, but it's still only $1.70 a share. Look at the next day. Well, and then it goes out to Monday. It doubled again. So the farther out you go, the more expensive these things get. And if we're live day trading, then we don't need them very long. So why spend a bunch of money? And by spending less money on the option, you can buy more contracts and therefore have more leverage. So QQ and SPY, number one is there's always one expiring, and that keeps them very inexpensive. Number two, super important. Okay, now we might be getting a signal here. We have a step down here, we have a step down here, and we have a step down here. Now we have to be mindful of what might stop it. And I see pretty important support right here because it pivoted and it pivoted. So this is when Lee and I are usually going to say, I'm looking here right now at the 279.80, and I'm going to open up my trade screen, and I want to make sure it holds 269.80. And you can see the price over here. It's 269.77. It's not holding, and this is a big step down. So I'll go in here. And in terms of a stop loss, well, we can talk about that in a minute. So did you see why I went in? Now, again, the trade might not work, but it is a pretty high probability trade because this step down, all this step down, all this step down, you know, I would be surprised if this one didn't come down pretty good. There it goes. You see, it just was worth 100, 120, 180 now, 260. So there you go. Now it's worth 300. And so at any point, if I say, you know, this is pretty good, I like this profit, I'm always looking to see where it might stop, and I'm making sure the indicators are cooperating. Well, this flattened out, and chop indicator flattened out. And even though this is important, now I'm talking, I might give up some profits here, even though it was worth whatever 380 at one point, that doesn't matter. If you see the indicators level out and you're going to close it for a 280 profit, that's fine. So I'm going to close that thing right there. I don't know what's going to happen next, but the fact that this leveled out and didn't get longer, and this actually got a little bit taller, and the chop index kind of went up a little bit, that was my cue to exit. And this is when I'll say, guys, let's get out. Let's not mess with this thing. I don't know what's going to happen next. And that's when I'll sneak this line down and say, all right, now let's see if it can break its previous low of 269.65. What did I really miss? I took a nice profit, and then I waited to see if it triggered again, and then I jumped back in again. So I'm going to right click. I'm going to create new order. And now I'm just going to sit on this thing until it comes below 269.65. I can see the price here. And you'll see how it'll test it, and then it'll come up. But what will tell you if it's really going to be a good trade is this. You can see it. We tested it all kinds of times, but this didn't go down until this candle where I entered. And it wasn't a big trade, but it was well timed. We jumped in and we made some money. And that $320, this is 2,000 units. So that's about equivalent to, call it 15 contracts. It's about 75% of this number is what your option price would have done. And so that means it was about a 20-cent move. So when you're starting off, what I would like to see is you look at this. I don't want that. I haven't looked at it. I don't care about it. When you go to your account history, history. I mean, this is what I want to see. I want to see over and over and over that you made money, that you bought it at, let's say, 269.70 and you sold it at 269.89. Good trade. You're doing good. Here, looks like we bought this one at 381.35 and we hit a stop loss at 381.20. So if your account hasn't grown, now my account's grown almost 32,000 just by doing that, just by teaching people how to follow these signals. That's what I want to see happen. I want to see this up at the end of the week before you're ready to trade one contract. And then I would like to see you trade a really small delta contract. Notice how the indicator did a perfect job of keeping us out. I mean, this thing would have backed up and we would have had a loss up here, but now it might come crashing down again. And when you look at this, you're going, well, you never should have gotten out, but this would have been painful. This was a pretty bad pullback. So yeah, big time re-entry here. We have our step down. We have the indicators getting progressively worse. Did I sell it or buy it? Okay, good. And it certainly seems to me like it's going to continue its path down, because you can see this is stepping down. This is getting worse. This is getting worse. And lo and behold, you know, I'm making a little bit of money right now. Now, here's the deal. See how it's jumping? Like I was up 120, then I was down 120. That's what these moves can do. But, and like, there's no way that I will stay in this thing beyond this line. Even if the indicators let me, I'm not going to stay in it. Well, this is a really good trade now, but it touched a really important pivot point. See that? So why do I want to mess around with a really important pivot point? Now, this is still stepping down. This is still getting worse, and this is still going down. So the indicators would have you stay in. But what we know is when we hit a key level of resistance or support, the bounces can be very severe, and this $400 profit could disappear really fast. So for me, I'm too close here. So I'm just going to get out. Now, did I milk every penny out of it? I did not. But if you look at those last two trades, I think I probably made 560, 600 bucks. And I trade 3 times that amount of contracts. So for me, you would have just seen me make $1,800 on 2 trades. For you, it's going to take a while to build up your contracts. But did you notice how it looked like it's going to break through? It tested it multiple times, but with every test, the indicator said, nah, I don't think so. This did not go down. This did not get bigger. This did go down a little bit, but I want to see good confluence. But then all of a sudden, it looked like it was breaking pretty big. And I had drawn my line, so I knew what I was looking for. And then I saw the step down and I saw the step down, and it was just a perfect entry. And then I didn't mess around. The indicator still said stay, but I already knew you got this really big pivot point. And while I know this might seem overwhelming, it's not that many things. But when you're new, 3 things is too many things. But what you're going to find out is this is not that many things. First, bear signal, red candle. Second, and most important, step down here. Third, and I'm just going to count them all together, you want to see a confluence here. This should keep getting worse. This should keep getting worse. And then, so that's 1, 2 things, right? Just making sure the indicators are all moving in the right direction. And then go back and make sure you know where the last pivot point was, because you just saw what happened in real time. Boom. You also saw what happened in real time when we broke through a pivot point. And now it might very well be coming down and breaking through again. And the chop indicator saying, you know what? It might be a good reentry, but is the DPO, the green line, telling you it is? Not quite. Not quite. I need this to stick out longer, much longer actually, or two bars in a row where it gets longer a little bit. And then I need this to be going down at its level. So all of this move here, I'm not all jacked up, ready to jump into another trade. I would load it up. So I'll go back to trade, create new order. We're going to be selling these. And that's it. Now I got to wait. And it is starting to show some signs, maybe. This is working its way down. I still don't have this thing going. I don't have this thing going. I want to see the whole picture come together. And that's when I'll go in. And guess what? Sometimes the price keeps going and the picture doesn't agree and you miss that. But it's worth writing down too. It is far better to miss a trade than to take a bad one. Far better. Our goal is not to take a trade. Our goal is to not take a bad trade, because that just sets you back. It does all kinds of things to you emotionally. So I'm always thinking first about avoiding it and why should I avoid it? I'm always thinking, why should I avoid this? And at what point should I really get nervous? Well, I should avoid this one right now because the indicators are going in the wrong direction and it's sticking at this last line. I don't have any reason to get into it. If I did get into it, it probably wouldn't be until it broke below this pivot point. Unless it goes all the way up here, then it's a new game again. All right, let's see. So Debbie, one more reason on why QQQ and SPY. Well, number one, they're always expiring, so they're very cheap. Number two is look at the difference between the bid and the ask. It's 1 penny. 1 penny. So what that means is if you're going to buy it right now using a market order, then you're going to pay 150. Automatically, if I hit market order, I'm going to get filled at the ask. Why? Ask is what it's selling for. Ask is what everybody, like, think about a car on Craigslist. Ask is the asking price of the car. And if I just really wanted that car bad enough and I called the guy up and said, hey, I want your car. Well, we're all going to assume I'm about to pay ask because I showed motivation and I want the car. Bid is what is offered. So maybe I like the car, but I'm not going to call the guy up and offer him 204. I'm going to offer him 201. The difference between these two is basically, think of it like a real estate commission. It's not actually a commission, but it works that way. So if I instantly buy this right now at 206, and then I want to get out instantly, let's say price didn't move. I bought it, then I bought it for 205 and I sold it for 202. I literally lost 3 pennies without doing anything. Well, 1 to 3 pennies is almost nothing. When you look at in terms of, I'm just randomly going to pick something. Wow, that's a tight spread too. That's not usually that tight. God, these are all really tight spreads. Anytime I can see a 1 or 2 penny spread, I'm kind of interested. Okay, here's 10 cents. So I'm going to buy this, sell it instantly. Even if the price doesn't do anything, I lose 10 cents or $10. And in my case, with 40 contracts, it's $400 spread between the bid and the ask. I'm not going to do it. And that's why SPY, QQQ spreads are always tight. Volume's massive. Liquidity is phenomenal. And we can use market orders to get in and out. Tanner, why don't you go further in the money more often to get a larger delta? Just because there's a whole bunch of reasons, but let me go back to SPY. I'll just go back to Q. So, and I'm thinking about, the average member, and let's just say the average member has $5,000, and I want to buy, this one expires Friday. This is a call I bought yesterday, just because I believe that the market's probably going to get a little bit of a Santa rally in the next couple of days. It's down right now, but I suspect it's going to go up. And I only bought one. Just because it's not the best time to be taking on risk right now, especially bullish risk. But let's go to the contract we'd be trading right now. And if I want to buy the 270, that's about a 50 delta. And it's if I have $5,000, I can buy 30 of these. 30 of these would be $4,200. And if I want to buy this higher delta, I can only buy 10. I promise you the ROI here is going to be way better. So $1 in the stock price here is going to make me 50 cents. times 30 is 1,500. The same dollar investment here, I'm going to buy about 13 contracts at a 72 delta. That means it's going to move 72 cents per dollar times 13 contracts is $900. So I can buy more, make more, and my ROI is way higher. However, if I'm just really all by myself and I'm looking for a quick scalp late in the day, I'm not sure really like it's an okay signal. I might go up to a higher delta, but usually we stay right about where the money is. Make sense? Cool. Wow, we're out of time, guys. That went by fast. I hope this was helpful. I think you got to see a couple of good trades in action. By the way, here's another bear signal. Yay. Red candle. Yay. But the chop didn't come down. Now it did. And this is getting worse. So, but this is a really key pivot point. Remember, this is the 269.40. Watch how it hovers around 269.40. I got to make sure it really breaks free. But with this kind of a drop down, it's very likely going to break free. And so I'm be really, my finger would be on the trigger on this one. What I don't like now, it's 269.47. So it broke, retreated, it's broke, retreated a lot of times. The indicator tells me it's going to break. So this is what I probably would go in. But you want to be really careful when you're around these major points, because a lot of times breakouts are fake outs, and they can be really harmful. So now look what happened. So I waited. I wanted to get one more look. DPO went the wrong way. This leveled out. So I saved myself. Oh my God. I mean, if I jumped in, I probably would have jumped in. I would have gotten filled around 269.30. And then the price just shot up for a minute to 269.59, 30-cent jump in price, which is about 15 cents a contract. For me, I just went from taking a trade and 30 seconds later, I'm down $600 because I didn't jump at it, because I knew this was really an important level. And I knew in this particular case, the step down wasn't enough. And so why not wait for one more? And the reason I say that a lot is if it's really a worthy move, if it's like a move like this, and we get several of them a day, what's the hurry? If you get in on this candle, this candle, this candle, this candle, because you're probably going to only hold it till this much. So it's always worth waiting for one more candle for confirmation, and that'll stop you from making a huge mistake. Preservation of capital is your number one most important rule. Okay, now I'm going to go. I'll talk to you guys later. Hope this is helpful. Send me a note if I can help you. Bye.